right, we're gonna go ahead and open up for Q&A. I see Mark's the first to raise his hand now. Mark, go ahead.
Can you hear me?
Yep.
Hi, Stella. It's nice to meet you. One thing I heard you talk a lot about the fund setup, and it's not a fund, but the setup of the structure, let's say, and the types of people that you're inviting to invest in this club. Sounds like a lot of smaller operators, but it sounds like you're getting some VC money too. Who's operating your deals? Who's a seasoned operator that's running the show? Because you focused a lot on the structure of how you're doing it, but in this day and age, it all boils down to operations.
Yeah, that's a great question, Mark. So the operations, the initiative is mostly led by the club leader, right? They're the person that is bringing the deal flow to the club to look at, and the club makes a collective decision on where their money wants to go, and they also approve the business plan, right? So let's say if you're buying a hotel, you as the club leader, you'll bring hotel opportunities, and then you can say, we're going to hire XYZ as the property manager. These are the decisions we're going to make, and that really just gets passed off of whatever team is responsible for the day-to-day operations.
So you're hiring third-party managers.
Yeah.
Yeah, and real quick too, because I think Mark, you might have had a slight misunderstanding. So Stella runs Factional. Factional is
I
a
get that.
okay, yeah, it's a platform that allows operators to become a lead in an investment club. So instead
I
of
see
raising
that.
money as a syndication, yeah, they're using the investment club model to raise money for their deals.
So a guy like me who manages a large portfolio could come into your fractional, trying to get the terminology correct, let's call it a club, but you're doing a lot of the back office stuff.
Yeah, like think of us as legal compliance and back office in helping you structure and run this different legal structure called an investment club, as opposed to a syndication or fund. But it's still you as the club leader bring in your investors and bring in deal flow that you think makes sense based off of your criteria back to your investors for them to make a decision on.
I have teams of bookkeepers, accountants, lawyers who all work for me. But I come to you and participate in your club. Which teams am I using? Which teams of professionals am I using?
So you would be working with our legal counsel to structure the club side of the legal docs, right? So we're creating the LLC for the club, we're creating the operating agreement for the club, but you likely will still want some sort of legal documentation around how you're working with the club, for instance, right? Like in terms of how you might want to make money, whether that's a JV agreement, a profit sharing agreement, or whatever it is, right? That piece of document will be generated by your legal team, for example,
All right,
right?
so let me frame my question. So where I'm driving at this is, for me, I'm like control freak times 1,000. All right, I don't like giving up control to anything to unknown quantities, and so I'm trying to figure out where the interface is.
Yeah, so the part where they have to have active participation at a baseline is deal selection. So everyone in your club, they have the right to participate in approving or denying, let's say, property A that you're finding and presenting to the club, that they agree property A does in fact fit the criteria for why everyone is here and why they pulled their money together for the club to deploy the money that's already raised into property A.
Okay.
That's the main place where people have a voice. And we've been in business for 5 years now. No one has voted against their leader unless the deal obviously does not fit the criteria, right? If you have an RV park club and you bring in a hotel, obviously people will be like, what the heck? That's clearly not an RV park. We don't approve. But in practice, it's like everyone joined the club because they believe in a buy box. They want to work with you as the leader. So as long as you're bringing something that fits, it's more of the formality of making sure everyone did go through the active participation on looking at the deal and agreeing that it's the decision that they want to make as a group. That's where the decision is made. You're not going to have people voting on, do I want to paint the tile blue or green, or the nitty gritty day-to-day operations? That is not something that the club members are going to be involved in.
So is that memorialized in some kind of an agreement that control resides with the sponsor?
It's in our operating agreement on what are the material decisions people participate in. So those are the only things that they're going to be
Nice.
involved. Yeah.
It's an interesting model. It's just hard bringing people into these clubs, from what I can tell, and I don't know anything about it. But from the outside looking in, it looks like I could be almost a joint venture with a lot of people who are really inexperienced in real estate or whatever venture I happen to go with, which is not that attractive to a guy like me. But I'd be the first to admit I don't know what all the details of this yet. So that's what I'm trying to figure out. It's all about control. As a sponsor, here's another question for you: who guarantees the loan on deals?
Usually it's the club leader, and that's one of the reasons why they can ask for additional sweat equity, right? Because they want to be compensated for the additional risk that they're taking on.
But do the club members, how much control am I? It's all about control. So, so I'm now guaranteeing the loan, and I'm in bed with a lot of people who may or may not be sophisticated enough to know how to operate an asset. How much say, and I just don't understand, how much say do they have in the day-to-day operations, the distributions? Let's say deal goes south. Now we're facing who knows what. Shit happens in that kind of a, how much am I going to have to listen to people who have not guaranteed a thing on the deal, and yet they've got some kind of operational say on how it goes down?
Yeah, that's a great question. So day-to-day operations, they're not involved in, right? Like you still want to set as much as expectations up front, right? Like you can say, hey, we're going to hire this property manager. We're going to have a minimum reserve of blah. We're never going to do any distributions unless we have more than this baseline. It's going to be quarterly distributions. We plan on sticking around for whatever, right? Like that business plan, you still want to talk about all of that up front so people are on the same page. And then they're really only just deciding how the money is being deployed. And from there on, you follow the business plan. If things change, you give the day-to-day operations they're not going to be involved in. But let's say something very critical happens, right? And it's, hey, we need to, instead of selling the property in 5 years, which was the initial business plan proposed, we now have to hold it for another 5 years for whatever reason. What do we do? I think that conversation is similar to a conversation you have even with your syndication investors too, right? Just explaining what is happening and whatever course correction that needs to happen from your end.
So is that a consensus decision to hold for another 5 years, or is it just the sponsors who make that decision after informing the club members?
It's still a collective decision that needs to be made.
Okay, that's what I thought.
Yeah.
What if there's a capital call?
Same thing, right? Like you say whatever is the capital call, that's sent to the group. People are responsible for paying their pro rata share of the capital call. If they don't pay, then they get diluted.
To be clear,
That decision to do the capital call, to have the capital call, still need to have consensus from everyone. Is that correct?
Right.
Yeah.
So just to be clear, the club is not guaranteeing the note. The sponsors are guaranteeing the note, but they have a consensus decision-making process that they are having to go through.
Yes. Yeah.
Okay.
Is it possible to structure the club that for those scenarios of capital calls, scenario of when to sell the property, that the club members don't get to vote on those kind of decisions, and the person who signs on the note is the one that gets to make that decision?
Yeah, if it's a critical material decision, if you especially have in written wording that no one else gets a say, then that does read like a security, which would then make this not compliant. So that's why we don't advise that being in any legal wording. All I will say is in practice, having seen thousands of clubs being ran, some of them since day one and are still being here, right? So 4 or 5 years at this point, no one is trying to be unreasonable, right? They join the club because they want to work with you and believe in your leadership. So a lot of times they're leaning on you for what you think is the best outcome and really just trying to understand why you think this is the best step, and they will vote to approve that they agree with your logic, right? That's really how we've seen it in practice. But I totally get where you're coming from, Mark. I think if you're an operator that wants guaranteed control over everything, that is a syndication. That is a security at the end of the day, right? You can't.
Look, and everything you're describing sounds like a syndication, except I have to now give up a lot of control while I'm guaranteeing maybe a $60 million million notes. You can understand why that's
Yeah, definitely not for everyone. And I personally think the larger the deal, the less it makes sense to run it as a club.
Yeah.
Yeah. And to be clear, I purchase big deals. I can see this working on a smaller deal or a smaller opportunity where you might have 10, 12 people. You probably work all day long. I'm just trying to figure out the logic of this thing because obviously there's some upside to it. I'm trying to figure out where it stacks for me and what kind of deal it might work. It's smaller multi, or I'm actually building a series of golf simulators. It might work in something like that. Yeah.
Very good.
Okay. All right. Thanks a lot. I appreciate the talk.
Of course.
Thanks, Mark. All right,
Yep.
Seth, you're up next. Hold
Hey,
on real
yeah,
quick.
Stella, thanks for doing this. I'm just a little context. So I'm pretty good friends with Ian Cruz, who I'm sure you're familiar with. He's a big fractional guy, and I've observed him for a while. And two questions for you. One is just basically, sometimes my joke is I just want to be Ian Cruz when I grow up because he's built this great like fractional community, and then he does these deals. And I'm like, I guess my question is, how did he build that, or how do you build that community? It seems like I met him when he already had it, and so I never saw the process of doing that. Is it you bring your network into it, or is it you constantly promoting, you build the club and then you constantly promote it, or what are the mechanics of that, I guess is the question. And of course, like a fund, you're doing that prior to having a deal, obviously. But do some people like get a deal and then say, oh, I'm going to go build a fund for this, or what? So that's my first question. And the second one is just to clarify a little bit too. So I've always been a little bit confused, but I think you've covered this. But if I have just let's say a small syndication, it's like a $4.5 million deal, need to raise $1 or $2 million. And is the idea that the club does the entire sort of deal and that's it? Or is the club often side by side with, let's say, regular sort of LP investors who I would bring in from friends and family or something like that? Just how it's kind of structured. Thanks.
Yeah, great question. So the first one is, how do you build the audience for your club? I honestly see the way people do it is just similar to how they're building an audience for capital raising in general, right? You're posting a lot on your social media, you're doing a lot of storytelling, you're networking, and then you basically funnel that into wherever you have your investor list or your CRM. And if you're someone that's working with both like larger check size investors and smaller, you can then have some decisioning in your funnel essentially, right? Around who would you then ask to join the club versus maybe a syndication or a fund that you have in parallel. So that's how Ian does a lot of it. You'll often see that he's in a bunch of real estate investing communities and he's educating newer investors and just building his own personal brand as a really great operator and as a capital raiser. And then whenever he's ready to launch a club and officially go into capital raising, then he goes to his investor list and just say, hey, we're doing a Zoom call to talk about my new club idea, come join. And that's basically how the conversion happens. So that's like the sales funnel of capital raising leading into a club. And then was there a second part to your question for that one?
Yeah. So related to, and then following up on that, and then when he gets a deal, like and again, I don't want to make this all about Ian, right? But just like this is what I've observed closely, is you have the club and it's a fund in the sense that you're getting people into it before you have that deal, but then you get a deal. And I guess a couple of questions there. Really, does the club do the deal entirely? Like it's just that deal is done through that club and there are no other investors who I might bring in as well, sort of other LPs who are not part of the club at all, helping to do the deal is one, I guess, the main part of the second question. But then also let's go with that. We'll just go with that instead.
Yeah. So usually it is the club is doing the entire deal. That's why earlier, like when Tim asked, could you have the club then go participate in a larger syndication or fund? It's more like gray area, right? It depends on like how that syndication or fund is set up, etc. It just becomes more complicated. So the most common use case is pretty much the club owning the entirety of the deal. So in that example you gave where, they're raising, like you're pulling together 1 to 2 million, like that's a perfect sweet spot for an investment club where you can have, let's say maybe 30 smaller investors pull together $1 million. They own the entire deal as the club, right? That's like super easy and super straightforward. So I would say that's most common. And then in terms of, do you do the club first do you have to have a deal in order to do a club and all that? It really depends. If you have good deal flow, we would definitely recommend setting up the club before you even have a specific deal, because then it just puts you in a position of more leverage, right? It's like you've raised the money. Now it's just you have so much great deal flow, you can deploy it whenever that good deal comes, right? You don't have to raise the money afterwards, which is a lot more stressful for everyone. But some people don't operate like that, right? Some people might maybe only find 2 good deals every single year, where if you raise the money in advance, people might be just sitting on that money without it being deployed for 6 months even, right? Which then isn't a good investor experience. So if you're in that bucket of things, you could wait until you find the deal, and then you still create the club around a criteria so that the club isn't centered around a specific deal. You will then look at that specific deal as like a first potential opportunity, such that in the case that deal doesn't pan out, similar to that Brit case study I gave, your club is still intact and the capital is still intact. You can then just find a backup plan for it.
Okay, great. And then one final one, let's say I want to join a club as a club member, and I say, okay, I've got $50,000 to put into this club, and then whoever's leading it gets the deal, and then says, okay, we need from everybody only $25,000. So obviously, I can just commit. I paid the $25,000, but is it like how does the amount that you commit to join the club, or is it just does everyone pay a certain amount to join this club, and then if we need more or less when the actual deal comes along, how does that kind of work? Because you're committed to doing it, and if you don't do it, you lose your fee. But if they ask more of you or less of you, just wondering the mechanics of that.
Yep, great question. So you just set the minimum investment, and then they can invest that or more. So anything above that is allowed.
I see.
So let's say you raise $1 million and then you end up finding a deal that's for 650 and people approve that deal. And then the rest of the 350, you could return back, or maybe you can find a smaller deal for that to deploy. In all those cases, we won't punish the investors. Like, it's just how the business ended up shaking out. All where the punishment is really for people that said they were going to invest and then never invest. That hurts you and it hurts everyone else. So that's really the only case we're preventing.
Okay, got it. Thank you.
Excellent. Okay, Margot?
Hi, I just want to clarify when exactly it is that you bring the money in, because I know you talked about the fee that's a deterrent to saying, yeah, I'm going to bring money and then you don't. But now we were just talking about if you bring the money in and then the deal doesn't come through, then you might put it in another deal. When do you typically collect the money?
Yeah, so we typically collect the money after the club's raise target is hit. So let's say you're trying to raise $1 million, right? Everyone submits the 3% to lock in whatever they want to commit to. And then we see on the platform, okay, there's 25 people that signed up for various amounts. And now as a collective, we have $1 million now. So at that point, fractional, committed to. So at that point, we're going to create the LLC. We're going to create the operating agreement. We open a business account for the club as well. And then at that point, the investors, they will either ACH or wire their actual investment amount to this club's LLC business account.
Okay. So that could be before or after you've actually found a deal.
Yeah, exactly.
Okay. Thank you.
Yep. Great question.
All right. Any other questions? Thank you, Margot. I'm surprised that's all the questions you have. Where's Christy? She says she has 100 questions.
I told her to tell me her questions, but she had a meeting that she had to get on at 4 or 3 Central Time, so she wasn't able to stay on.
No worries. I can connect
We'll
you guys
be in
directly
touch with more questions. You know, we'll be
yeah. I can connect y'all directly with Stella in case you have more questions for her. Okay, I don't see any more questions. So we're going to wrap up this part of our interview, and then we'll put you guys into your breakout session. Stella, thank you so much for being on this show with us today. Really appreciate you. Yeah, it's been really great to learn more about your platform, Fractional, and how we can use it to raise capital. And and then getting to hear questions from others that's on the Zoom today to got me to understand it a bit more, the questions that I didn't even think to ask. I really appreciate you, Stella, for being on and being patient and answering all of our questions today.
Of course. Thanks for having me. That was a blast. I appreciate everyone here.
Yeah, thank you. Okay, let's take a group picture real quick before we put into breakout session. Guys, turn on your cameras. Adjust my view. Turn on your cameras, everybody. Let's take a quick picture real quick. Is ready? And Stella, we flex to take our pictures on this show. There you go. Are you guys ready? 3, 2, 1. Yay.